Amidst of the complex situation, as you mentioned before about the U.S. bank is in tough situation, do you think it will lead to the recession of U.S. and how do you see the impact to the Southeast Asia market or stock market?
If you pick up Economist magazine September issue last year, they mentioned about 3 regions that will be growing: ASEAN, Africa, and GCC. And in ASEAN, at Juwai, IQI, we are buoyant on Malaysia, Indonesia, Philippines, Vietnam, and Thailand. And we are bearish on Singapore. Even we are bullish on Cambodia. So the reason is very simple. Macroeconomic stability in these regions. Number 2, growing middle class. People are having higher income level. And most importantly, the young crowd, the average age between 25 to 40, that is growing in these regions. If you look at Europe, they are baby boomers. Even in US, there are a lot of baby boomers coming to the market and they're not contributing anything. So I think we at Juwai, IQI, we are quite bullish on ASEAN. We are bullish on GCC Gulf, and we are bullish on Africa. We are bearish on Europe, US, UK, and Japan.
Okay, Mr. Shan, how big for you to see the Fed interest rate affect foreign investment in South Asia country and their impact on the region's economic growth?
I think most of the investment is coming in ASEAN because of macroeconomic stability. Growth stability is tantamount to consumption and investment. Consumption patterns are pretty strong. Investment continues to grow. And the most important factor in the last 17 years have been 2 factors: confidence and fear. Wherever you have economic confidence, the economies are on the upsurge. The governments are in total control of the economy. The consumption patterns are strong, not only for local investors, but also for foreign investors. ASEAN region contributes significantly, and it is giving hope for global economy recovery along with GCC and Africa. So that's why I still remember when I met Jim Rogers when I was studying at University of Chicago. He said, in the 19th century, everybody would be going to London. In the 20th century, everybody would be going to New York. In the 21st century, everybody is heading to Asia. Asia is the future. Asia is where most of the consumption, investment, infrastructure investment will be happening. So I think that's why we are quite positive and optimistic about the growth outlook of ASEAN region.
Okay. Shan, many expect the Fed to ease rates next year to keep the overall potency of monetary policy stable at a time when inflation is expected to further cool. How do you perceive this?
I think it's a very catch-22 situation for these central banks. It's very tough to be the governor of a central bank. Right now, monetary policy and the economic models have taken it has broken, basically. Monetary policy has been stretched because every interest rate that you increase, whether it's 25 or 50, 75 basis point, it takes good 12 to 15 months to make an impact on the economy. Yes, inflation has come down, but the conundrum is whether the inflation has come down because of increasing interest rate by Fed or Fed has hit the terminal rate. So this is what the market is, in a very perplexed situation, that they are wondering whether Fed will increase interest rate. In my opinion, Fed will take a pause. If they keep on increasing interest rate, it will create further pressure on the economy because economies can't take the pressure of higher interest rate. If they continue to raise rates, economies will go into deep L-shaped recession. So that will create a lot of problems for the government, that how to spur growth, how to instill confidence in the economy when interest rates are so high. Economies can't move when interest rates are so high. So I think the chances, the probability of hard landing, L-shaped recession is pretty high now.
Okay, well, thank you for your enlightenment insight, Chief Economist Juwai IQI Shan Saeed. Have a great day.